All right, what's up, Tycoon? Super excited for today's video. We're going to be taking a look at Baba, okay? Alibaba, ticker symbol BABA. And a lot of Chinese stocks are, facing a lot of FUD, okay, which stands for fear, uncertainty, and doubt in the market. And a lot of time, these are really great buying opportunities, okay? Now, that's not to say that, Baba is a buy right now. I'm not telling you guys to go buy and go all in, but I'm trying to bring it to you guys' attention, okay? The possibility, all right? We have all of these boxes up here. These are what are known as daily gaps, all right? We are looking at the 1 year, 1 day chart. We have 1, 2, 3, 4 gaps up to about 160, okay, is going to be the top of the gap. And also we have bullish divergence on the daily chart. All right. Now, bullish divergence essentially is when the stock price is making a low and then continuing to make a lower low. But if you go to these points on the RSI indicator, all right, and I'll make that a little bit bigger for you guys. Clearly we have a low here at that point as well, but we have a higher low here on our RSI. All right. We're still below the red line, which on the RSI, that kind of just indicates that, it's oversold, right? And then above this green line here, that's what's known as overbought. Now, these are all just indicators. They are not, crystal balls telling you, oh my gosh, buy it right now. And, you're for sure gonna go up. It's a guarantee, right? There's no guarantees in the market. But I just really wanted to show you guys this, okay? Apparently, some politicians have been buying up Baba, and there's a big fear of delisting, or what's going to happen with these China stocks, right? Are they gonna take it off the New York Stock Exchange and move it to the Hong Kong Exchange, things like that. But if you think Baba is still going to be around and still be trading on the New York Stock Exchange here in the future, I have a really, really great play for you guys to take a look at and consider. All right. But first, I just need you guys to drop a like for me, comment, subscribe, anything like that, if you found something useful in this video. Okay. We're going to go to the trade tab on Thinkorswim, and we're looking at the option chain right now. And we're looking at the January 20th, 2023 expiration date. Okay, so essentially what this means is we have almost a year. Okay, there's 316 days until these contracts expire. So there's what's called like plenty of time. Okay, and if you select the 150 strike and the 160 strike, and if we look here at the open interest, I like choosing both of those. Not only because on the chart, on the actual chart, the gap fill does go up to 160, right? It goes up to 161 right here. But if you look on the open interest, we have high open interest on the 150 and the 160 strikes. So what you do is you go to buy, you hit vertical, okay? And it's gonna pull up 150 and 155. We're just gonna change that real quick to 160, and we'll change this from 10 all the way down to 1 for the purpose of this video. And if you notice here, we hit confirm and send. The cost of trade, including commissions on this, is gonna be $101, right? But your max profit is going to be $900, right? I mean, a share of Baba right now is currently worth about $91. So when you think about it like this, okay, well, I have $100 right now. I can either get this vertical debit spread that has about 300 days till expiration with a max profit of $900, right? And all I'm doing is hoping that Baba gets to 150, 160, or near there, right, before my expiration date, and if Baba can move up and get to 150 or 160, let's say in August, September, October, something like that, then these call options right here will be worth more value. They'll be pretty valuable. Okay, versus if we just spend $100 on shares and we were able to get 1.08 of a share, and we're hoping to catch the momentum up to 160. We'll look here, and that right there is a 77% turn, or roughly about 75% turn, okay? Return on your investment. So, there's always going to be risks involved when trading in the stock market, especially when you trade options, okay? Options are extremely volatile. But if you have $100 that you're looking to put into it right now, this is a potential good play, where you could get a lot more potential on your money versus just outright owning a share. And it's relatively low risk strategy. When you look at the risk to reward, right, you're risking $100 for $900. So you can have a pretty flexible stop loss there, maybe 30, 40, 50% even, because your risk to reward that's a very nice ratio, right? Now, the key thing to keep in mind is there's no rule saying you have to hold this until Baba hits 160, right? What you can do is you can take profit along the way at any given point, all right? If Baba comes up and fills this gap up here to about like 125 to this area right here, and let's say your call option is now worth $175, all right? That's a 75% return on your investment. And now you didn't even have to hold for Baba to go all the way back up to 150. All right. So just keep in mind, none of this is financial advice, but I am trying to expose you guys and, just provide a little bit of education on some option strategies that you guys can use that offer some really good risk to reward ratios, versus just outright buying shares. Okay, now if you need some help on some tutorials, like I talked about bullish divergence earlier. I got a bullish divergence tutorial right here, actually to the left. Okay, if you guys want to watch that, it'll teach you a little bit about some divergence. Okay.